Let's get to a set of stocks that have been attracting investor attention because of the fillip given to middle-income families in search of their dream home. Remember, the Ministry of Housing and Urban Development has set the ball rolling on credit-linked subsidy scheme. It's called CLSS. Gagan Banga, the Vice Chairman and Managing Director of Indiabulls Housing Finance, has joined us. Morning, Gagan. Always good to have you with us. This details are now out. You get a 6.5% subvention, which is the existing scheme. For the new schemes, if you are going to buy a 9 lakh house, 4% will be paid by the of the interest will be paid by the government, and if it's a 12 lakh home or 12 to 18 lakh home, then 3% gets paid by the government. What is the operational procedure? By when does this kick off? When can you send your first file? I assume NHB has to sign off on it.
Yeah, so just to clarify, the good thing about the revised CLSS is that there is no cap on the value of the house. The only two caps that they've put is on the size of the house being at 1100 square foot, which basically covers carpet area, which basically covers almost everything which falls under mass housing, and especially given whatever Indiabulls does, and also an income cap of 18 lakh rupees per annum, which again covers almost all of the customers that Indiabulls or most large housing finance companies would be catering to. So it's a scheme which is well targeted towards home loan borrowers who would be typically taking loans of 2 to 3 million rupees. So anybody who's borrowing between 20 to 30 lakhs will get a large advantage out of this. And if the loan runs for say 15 years for a loan of 25 lakh of rupees, this subsidy along with the 2.5 lakh rupee plus 1.5 lakh rupee on principal and interest tax waiver that the government anyways gives, the cost today of taking a home loan is down to 0.5%. So yes, so that's how significant this move is, and it is not restricted to the economically weaker section. It is bang in the middle of what housing finance companies, or for that matter most banks, are also doing. So roughly, my estimate is that approximately 15,000 crores of home loans get given out per month.
No, I take your point.
And my estimate.
Yeah, Gagan, I take your point that 18 lakh would be aspirational in the 20 to 30 year band of young people who want to buy homes. But I wanted to know the procedure. When that old 3 to 6 lakh scheme was in place, you'll have to get things vetted by NHB, isn't it? How long does it take before, say my son applies for the home loan and it gets cleared? Is it an easy process?
It's a very easy process, and NHB as a subsidy provider or a subsidy financier is extremely efficient. So within about 3 weeks of us raising a claim on NHB with the due details, and the due details are extremely standardized, we actually receive the funds, and then we are supposed to immediately give credit to the borrower. So it's I would say roughly a 2-month process between the actual sanction and disbursement beginning and the subsidy hitting the bank account of the borrower.
Okay. Gagan, good morning. I just want to talk about the current quarter as well, because I was reading a couple of reports that in some cities the house registrations have been at multi-quarter highs. Is that translating into business as well for you?
Yeah, so all through the process of demonetization, we had been maintaining that the big win out of demonetization is going to be a large part of the monies coming and hitting the banking system and effectively reducing the borrowing costs for the borrower in due course of time. All of that has played out extremely well. Between the start of the demonetization process to today, interest rates for home loan borrowers on a gross basis are down by 65-70 basis points. On top of that, you have all of these schemes kicking in. And this is resulting in business being higher than even October by between 15 and 30% for most mortgage lenders, including Indiabulls Housing. And when we talk to developers, especially in the mass housing space, they're also registering as much as a 30% increase in footfalls even compared to October, which at this time was the festival month. So generally, home lending and most retail lending is seasonal and cyclical. And Q4 tends to be the extremely busy quarter. And this time as well, Q4 is turning out to be as busy as one had projected it to be.
Okay. How are you expecting? I interrupted you when you were speaking about this 15,000 crore housing market you say will open up. For the housing finance sector itself, what is the kind of numbers you are looking at in FY18, for instance?
What I was trying to say was that housing mortgage industry today is roughly 15 to 18,000 crores on a monthly basis. And as per our estimates, the customers who get covered under the scheme would be as large as 10 to 12,000 crores of customers could start getting benefits out of the revised CLSS. So that's how meaningful this entire proposition is. And my sense is that, mortgage industry, which has been compounding at 17 to 18%, would start compounding well north of 20% starting fiscal 2018. And that could well act as the big trigger that the GDP was looking for. And this would have an impact on labor, steel, cement, etc., etc. So that whole positive cycle can get kick-started because of the momentum that the housing industry is to provide.
Okay. Gagan, of course, Indiabulls Housing Finance is now going to be a nifty company going forward. So expectations go up naturally. Your thoughts on what kind of ROE, Indiabulls Housing Finance will be able to deliver going forward?
Our guidance across financial parameters has been that across book growth, profits, NII, etc., we will continue to compound at between 20 and 25%. Sometime last year, we had increased the book growth projection to between 25 and 30%. So we continue to stick to our guidance. We are already at approximately 26% return on equity. And the target communicated to stakeholders is that we will try and increase that by 100 basis points every year and get to 30-31% until about 2020, 2021. So we are firmly on that trajectory. And fortunately, we have all the building blocks that are required to be able to continue to grow towards a 30% type of return on equity from the current 26%. Following a profit compounding of between 20 and 25% and a book compounding of between 25 and 30%. So we are sitting on roughly 23.5% capital adequacy. We are at the highest credit rating. So whatever are the building blocks required to be able to achieve this growth between now and 2020, we are well in place. The good thing is that now the macro has turned more favorable for housing than it has ever been in the last 70 years. And that obviously enables us to look at our business in a more optimistic manner. So come the next financial year, we will come back to you with revised guidance.
Oh, yes. Thank you very much. We will look forward to that. And of course, this is a huge industry booster as well. Beyond housing finance, to, as Gagan was pointing out, real estate, steel, cement, and everything that goes into building a home. This could be the big kicker that the GDP growth itself is looking at.